Injective has already seen some phenomenal growth of around 40x since its bear market low point, and a lot of people are speculating how much further Injective could go in the 2025 bull market. So today I'm going to spend a little bit of time sharing my thoughts and opinions as to where I think the price action is heading. This will be my Injective price prediction for 2025. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's go ahead and take a look at what's going on with Injective. Okay guys, so we're going to check things out here. We're going to use a couple of tools to help us kind of predict out where the future of Injective is going. We're going to use Fibonacci, retracement, and extension tools. It's this one right here. These are the settings that I'm using, so you guys can go ahead and pause the video, copy these if you want. The important one is right down here where I have this little box ticked. This is for the fib levels based on log scale. This is because my chart is in logarithmic. You can see down here this little blue L. If I turn it off, the chart changes and basically becomes very hard to manage is probably the best word to say. Okay, if it's not in log scale, it'll look like this, and basically it's really hard to see what's going on. You can't really make any decent analysis. So instead we put it in logarithmic, which basically calculates all the price movements, and this here allows you to then basically see the price movements a little bit easier. And so because I use the price action or the chart in logarithmic scale, I must make sure that my Fibonacci is also in logarithmic. If it's not, then it will look like this. You can see how it changes, and obviously that's no good to anyone. So we make sure that that box is ticked, okay? So we're going to use that, and then the other tool that we're going to use is Elliott Wave. Elliott Wave is a fantastic tool at predicting out the ability, predicting where things are going to go based on the behavior of people. So the buyers and the sellers. The psychology of buying and the psychology of selling. The price action essentially is that behavior, and Elliott Wave applies itself to it beautifully. Now, it's a very complicated subject. It's complex. There's lots of rules. Many people don't draw it correctly, and therefore it fails on them all the time. I've put together a whole extensive course on this. It's down over at 𝗕𝗘𝗪𝗏𝗀𝗀com. I think I've linked it in the description. You can check it out. Usually we run various different 50% off coupons and stuff for anyone serious about understanding Elliott Wave, because it is a fantastic tool. Check it out if you want to. But those are the things that we're going to use today. Okay, we're not going to rely on indicators. All indicators do is show you what's already happened. They have zero predictive capabilities. You just make assumptions that the market's going to do something because you've already seen it do something else in the price action. Elliott Wave is a lot more scientific about it. It shows you the psychology behind it all and the rationale behind why you would expect something to happen based on the behavior rather than just on the price action kind of going lower than a 200 EMA, or because a MACD histogram is printed a specific pattern, or a stochastic's gone a certain way, and so forth, right? We don't rely so heavily on indicators. We rely more on price action analysis because, in my opinion, that is king. So those are the tools. Let's get into it, right? So in order for us to be able to predict out the future, we need to be able to predict out we need to see what's happened in the past and take a look at the behaviors of buyers and sellers so that we can see how their behaviors are shifting and changing in line with sentiment. Okay, so we can see from the origins of 2020 a very explosive move for Injective, right? Was 17 cents, and it rallied up very significantly to a all-time high. And I'm going to zoom in here and just make sure I get the correct wick. This one over here on 30th of April 2021 was a high of 25.07, and then this one is a high of 25.31, which was on the 12th of May. So that's the high. Okay, so there you can see that we had a very significant surge to the upside. This surge in that previous bull market, okay, was 14,583%. Okay, very, very good. Now, obviously, we have seen a bear market low point that comes in all the way down here. Okay, we'll go ahead and snap another line to that, and it looks to me like it's this one on the 13th of July 2022. That was a low of $1.12. This one over here was a low of $1.13. So the 12 takes the biscuit. There we go. Okay, so we can see we had a 14,500% run to the upside. We saw a bear market that lasted actually not as long as some, was pretty good for Injective here, with this move coming down to a reasonable 95.56. Yes, I used the word reasonable for a crash of 95.56%. Yeah, no, it's crypto. It's wild. And then, of course, we saw a fantastic run from those lows, right? A lot of people would be selling in fear down here because they don't understand the markets. But here you can see a very, very good run so far of 4,619%, 46x from the lows that we saw in July 2022. Okay, so great moves for Injective so far. And the question becomes, is history repeating itself? Is the sentiment gearing up for another big run to the upside? I think there's a lot of confidence that we can bring into this analysis based on the behaviors that we see most recently over here and based on our kind of structures overall. So let's go ahead and take a look using the fib chart. Okay, we're going to use a Fibonacci from the top to the bottom. Okay, here we can see that we retraced right down to very important fib level 382 right down here. Okay, so we went down to 112. Our fib 382 0.382 was $1.15. So great area for a retracement. A 38.2% retracement is down to the 38.2% retracement is a fantastic place to be. So really quite a key area to kind of keep an eye on. Now, if I go ahead and I move this over to $1.12, okay, and I'll put it right here, that allows us to be predictive over where Elliott waves would tell us that we're likely to go based on all of the behaviors that we saw in the previous bull market and the price action and the behaviors that we see on the reversal from the bear market. We do see a potential target right here. Okay, so this is going to be an area of focus. We'll talk more about this in a minute, but it's 166 to 542. Of course, that's a bit high, but we'll talk about that in a moment. Now, our structures, let me just move that way over there out of the way for a second. I'm going to go ahead and just move that over to here, get it out of the way. Right, let's talk about this bear market reversal because this is quite important. The behavior that went into this is important to help us understand what's going to happen over here. Okay, so taking a look, here we can see an initial kind of push to the upside, and then a retracement, and then another push to the upside. This is a three-wave structure, okay? So we call this an A, B, C structure. Essentially, it's 535, but these, in this case, I think this is leading diagonal, ending diagonal within an ABC structure. A bit bonkers, but it is what it is. Then, of course, we see this knee-jerk reaction. Of course, this led on and built into the idea of FTX and all that kind of stuff. Now, for anyone who doesn't know, that's an exchange to avoid because they basically just they did some really bad things. Anyway, you can research that if you want. If you're new to the crypto space, FTX is not a crypto exchange that you should be kind of using in any way, shape, or form. In my opinion, they tried to relaunch after basically bankrupting and basically stealing people's money. I'm just not even going to go into that legalities and all that nonsense. It's just piss poor performance over there. So just ignore that exchange. So you can see this is what happened in the market during that point in time. Anyway, this also is a three-wave pattern. Okay, so again, we have corrections coming down here. So we have the three waves drops to the downside. Then, of course, we get into very explosive three-wave move to the upside. Okay, and this is, again, you can see right inside here. Now, this one also looks like a three-wave move. You have your A, B, your C coming to the upside. Again, here you have a WXYXZ move. If I can draw that on, W, X, Y, X, and Z. Now, why am I telling you all of this? Well, I'm telling you this because the structures that we see here tell us that we are in corrective patterns. Although the price action was moving quite nicely to the upside, very nicely to the upside, and we saw, 46x, the patterns that were leading into it were telling us that there's actually going to be a lot of volatility, and that's exactly what we saw here. Okay, so we can see three waves, 5 waves, and all of these are what they're doing is they're telling us that the market is incredibly volatile. It's basically looking for liquidity extraction. Although the price was moving up through the supply-demand metrics shifting, the sentiment was basically get in, get out, get in, get out, get in, get out. Okay, basically not really riding things for the long haul. The sentiment there and the buying behaviors, the behavior of the buyers and the sellers were basically take the profit, then jump back in when it retraces. Ride it a little bit higher, take some profit, ride it a little bit higher, take some profit. And so you're seeing rinse repeat scenarios, right? So very interesting. Then we get into this little section. Now, this little section is very interesting to me, okay, because we have a very impulsive movements up to this area here, and then we have an overextension and we actually get 2 overextensions, and I find that very, very interesting. Okay, so here we can see a 5-wave movement. I'm going to draw this in so you guys can see a wave 1, 2, 3, 4, and 5. Okay, we have a retracement coming down here again in the idea of, yeah, looks to me like a triple zigzag again. So you have your W, X, Y, X, Z coming down, and then you have, again, a zigzag pattern, it appears, but this could actually be a diagonal based pattern. Then we get this explosive move, a retracement, and an overextension, and then another move down and another overextension into this finishing move here. But I think we could also maybe look at this through the lens that maybe we just have corrective patterns here going on for an impulsive kind of diagonal movement to the downside. So we could argue that maybe this here is actually the completed structure. So let me show you what I'm seeing here. Diagonal, down, up, down, extension. Okay, big 5-wave movement. That is our area. Actually, that makes a lot more sense. That actually makes a lot more sense, sorry. Wave 1, wave 2, wave 3, wave 4, finishing diagonal structure. Okay, so you end up with this 5-wave movement. Now that's really important because everything that led into that is corrective, but it is corrective in the idea that you have a 3, 3, 5, right? Now, the WXY is the only exception I don't like in that particular regard. So a 3-3-5 would be 3 waves up, 3 waves down, 5 waves up. And for the most part, you'd wrap that up as an ABC, A, B, and C structure like this. Now, with that, you kind of reach the end of your structure and basically you hit your targets. If we bring in charts again, okay, from our first kind of 3-wave structured point to the upside, we pull that over to our WXYXZ corrective pattern, and I'm going to go zoom right into that so we can snap it directly to the correct price. I'm going to remove some of the noise, make sure that I get that wick low. That wick low comes in at $5.39, so we'll go ahead and put this on $5.39. And if I move up now to where we peaked, you can see that our target would have been between 1 and 1.236. 47.82 to 80.06. Now, within that structure, you can see that we tapped into it and we got an instant rejection, right? This is the ability of tracking behaviors going into things. Now, the good news is that if we in fact have completed the ABC structure, the 3-3-5 corrective pattern to the upside, although in this particular case, the WXYXZ is not 3 waves, but it is a corrective pattern, so I'm going to let it slide. You can see that that's complete. We have the correction coming to the downside, which is not a worry at all. Maybe remove some of the noise. And that's actually a big reset for what could be a very, very, very big move for injective. So let's go ahead and take a look at this corrective pattern now. Okay, so taking a look at the corrective pattern here, and that is very corrective, even though it doesn't look like it to some. Okay, so why is it corrective? Well, we have the initial pull to the downside, okay, with this little wick low over here. This was coming in on April 2024. We had a push to the upside, okay, another drop to the downside down here. Okay, this was July. We then pushed upwards. Now, what's really important is that this push to the upside around that 200 EMA creates a lot of overlap right here. That overlap tells us that we're not trending to the downside. We then drop back down, okay, into August 5th lows. We move back up, creating more overlap, okay. We then drop back down. We push back up, creating more overlap, and then we're dropping back down right now. And so we're gearing up, in my opinion, for a big run. Now, up here, we can see a 3-wave move to the downside. Here's a 3-wave move. This is a 3-wave move. That's a 3-wave. So everything is looking very corrective. So we have basically A, B, C coming down here. We then have A, B, and C coming down here. All that gets wrapped up as a W, X, and Y. And then, of course, we have an A, B, and C structure moving up to the 200 EMA. We also have another 3-wave pattern here coming in down to those lows. So basically, we're looking for a break to the upside. Now, I can't time the market. I'm not very good at that. Elliott wave doesn't time the market, but the sentiment right here is very much what we saw down here, okay? All of this overlapping nature, only it's in the opposite direction. And I think we're going to be getting a big reversal in the market that's going to take us up significantly. So we are going to be looking for, obviously, the standard stuff. We need to get confirmed areas, breakouts above the 200 EMA, all the kind of usual stuff. But for the most part, we can see that sentiment is not about basically selling their bags completely and not really participating. They are actively buying and actively selling. They are basically just riding the liquidity. They're taking it out of the market, putting it in, taking it out, putting it in, right? And so all of this corrective patterns to the downside actually gives us hope that maybe we're going to be looking for a bigger runs to the upside. Okay, so obviously we can see here that we are still in lower highs and lower lows, all of that. The overlapping nature of the price action tells us that that kind of analysis tells us that we do find it short term and we do get breakouts. Let me find some real-time examples of scenarios where you have that. So I'm going to go ahead and clear out a lot of this noise so we don't have to see it. So let's go ahead and see if I can find one over here is a good example, right? So in here we can see that we had a move to the downside, move to the upside, move to the downside, move up, creates overlap, down, creates overlap, up, creates more overlap, final push to the downside, then we lift off, right? Now, if we go ahead and apply that idea where we can see, if I draw some trend lines in, you have lower lows and lower highs, and everyone's like super bearish, but those overlapping price action actually have a tendency to break out to the upside. And where we are with this is on a much bigger scale, where we can see where we have lower highs and we have lower lows on our time frame here. But this has a tendency with the overlapping nature of those candlesticks to want to break out to the upside. So how high is it going to go? Well, there's one of two things. We can ignore the C wave, okay? And I think that's going to be the conservative way, is if we actually think of this as a large zigzag pattern, okay? And I think that's potentially the better way of looking at it because it does put us in conservative price ranges. Our August 5th low comes in at 1351. So we'll go ahead and make sure that we snap this to 1351. And I'll go ahead and try and push that down. There we go, 1351. Now we can see that there's the potential for the price action to rally towards $100 to $130. And that's the conservative target. Now on the more bullish target, okay, if we go ahead and bring in a kind of big bullish breakout, then we could be looking for the price action to do some pretty phenomenal things. Okay, and I'm going to go ahead and just move this to 1351. And here you could see a potential price breakout on the more kind of moon boy kind of targets between 627 and 1,553. Okay, so you can see some targets in here. I think personally this is the more conservative one between that 100 and 130. We obviously have the kind of bigger macro piece, which would look more likely to see some kind of A, B, C structure doing something to that effect, taking us more towards 166 to 543. And of course you have those bullish targets talking about $600 to $1,500. So there's a lot of hope, lots of hype, and lots of potential here for Injective. It could potentially do very similar returns than what we saw back in 2021. There is nothing in the price action and the price structures, the sentiment of the buying and the selling, that has me concerned about a potential $100 Injective price prediction. So for me, this is a project that we probably want to pay close attention to. But of course, it's just my thoughts and opinions on the data in the charts and my personal thoughts as to where I think the price could be going. Where do you think it's going to go? Let me know in the comments down below, or join us in our free Discord server and we can continue the conversations down there. And guys, if you haven't done so already, check this video out right here. It's not one that you want to miss.